on stock selection, right? So again, as a new trader, I'm sure you come into the market and you see everything moving, right? We got our up gappers, our down gappers, our large cap up gappers. This stock has volume. That stock has volume. You got Joe Blow on StockTwits talking about ABC stock. You got this guy over on Twitter talking about a different stock. You're like, I'm so overwhelmed, right? I have 30 stocks on my watch list, and that's normal as a new trader that doesn't understand that we need to eliminate the noise and identify the top 3 to 5 stocks that have the best potential. Because the last thing that I want you guys doing is having your head on a swivel, looking at this stock, looking at that stock, this stock, that stock, right? Your head's on a swivel. You never have a chance to focus and hone in on 1 or 2 or 3 stocks. You're looking at 30, this one, that one. As a new trader, that's common. No one has yet to teach you the process to eliminate the noise, to identify the top stocks of the day. Our job as professional day traders is to identify the one good trade, one good setup, one good trade to lock in our profits. Our job is not to overwhelm ourselves. Our job is not to overcomplicate the process. It's our job to simplify the process, to make this as easy as possible. And what's the first step to being able to simplify the trading process? Getting prepared. And a part of your morning preparation is pre-market stock selection, eliminating that noise and focusing on the top stocks that have the best potential. So your question is, all right, Josh, I get it. It makes sense. But how do I eliminate the noise? How do you eliminate that noise and identify these big runners, the ones that rip 50% in a day, 100%, 400%? How do you know what stocks have the best potential? How do you properly and efficiently eliminate that noise? That's distractions, right? I don't want you having 5 monitors with charts on all 5. 3 to 5 stocks, focus, hone in, get to know that stock, and then trade the stock and make some profits. So how do you guys do that? It's all about pre-market stock selection, and there is a simple yet effective process to eliminate the noise and to identify those set stocks that you will focus on for the trading day. So let's go ahead and dive into it and not waste any more time. Today's lesson is pre-market stock selection, ladies and gentlemen, and the theme for this week is tailored around preparation, getting prepared, because we know that when we lack preparation, we fail on the market. But when we have when we prepare and we go through that preparation process, right? We know that we are on the winning side more than the losing side. So this theme this week is tailored around preparation. And today I want to start with pre-market stock selection. So let's dive into it. Pre-market stock selection is a simple process of selecting the best stocks to trade for the current trading day. Again, as day traders, as traders that trade, say, penny stocks, it's always something new. It's always something completely different, right? Today we were watching what? HYMC. Were we watching HYMC yesterday? No. Today we're watching ENSV. Was that stock even on our radar yesterday? It was not. What were we watching yesterday? HUSA, INDO, INPP. But today is a completely new list of stocks. How did we identify those? How do we know that these stocks have the best potential, right? We're going to dive into that. So again, pre-market stock selection is a simple process of selecting the best stocks to trade for the current day. Because as we know, traders trading small cap penny stocks, it's always going to change for the most part. Every single day, your list is going to be completely different than it was the day before. There are thousands of stocks moving in the market every single day. Like, let's be honest. We know there are thousands of stocks that are moving for the current trading day. That's noise, right? Our job in pre-market is to remove the noise, get rid of the noise, and simply identify which stocks have the best potential. There's a very simple process I follow, and it's so simple you think it's too good to be true. You're like, this is not going to work. It does work. This is something I've been doing for the last 6 to 7 years. Very simple yet effective process that I follow every single morning to eliminate that noise and to find the best stocks to trade for the current trading day. So I break it down into 4 segments for my morning stock selection, right? I break it down into 4 segments. Number 1, gappers. What's gapping? All right, I start by identifying which stocks are gapping in pre-market, right? Whether that's 1%, 5%, 100%. I start by identifying which stocks are currently gapping up or down, right? Because we could be looking at dead cap bounces. Again, I'm looking at gappers, up gappers, down gappers, stocks that are trading higher or lower substantially compared to what they were doing the prior day. I start by identifying which stocks are gapping. Number two, I look at the volume. Volume is like 80%. Volume is everything. Remember, volume equals activity, and activity equals profit. If we don't have volume, there's no activity with the stock. It's not moving. If there's no activity with the stock and it's not moving, it's going to be hard to make profit. So volume, volume, volume. That's the second thing that I look at. I compare the current volume traded today compared to the average volume. Number three, there has to be a catalyst, right? Why is the stock moving, right? There needs to be a catalyst, and there's multiple forms of catalysts that we'll dive into here in a moment. But again, number three on my checklist is catalysts, identifying why the stock is moving. Number four, the float. Now, as option traders, individuals that are trading options, right? You don't have a pre-market stock selection process. You have one process. That's building a list of 20 to 30 stocks that you're always going to trade options on. You have a set list that you've built. And the only thing that you do is you look at that list every single day, identify your opportunity, and trade those stocks when it comes to options. That list doesn't change the way a penny stock watch list will change. Another thing that you're not too worried about with large cap stocks that you're trading options on is the float. You're not really too focused and mindful of what the float is. But as someone that's trading small cap penny stocks, the float is extremely important. The float's going to tell me if the stock can rip and run or if it's going to be a slow and steady mover. So again, number one, I'm looking at gappers, up gappers and down gappers. Number two, I'm looking at volume. This is where I put 80% of my focus is volume, and I'm comparing the current volume to the average volume. Number three, the catalyst. Why is the stock moving? There has to be a reason for the stock to be moving. And number four, specifically with penny stocks, is the float. The float's going to tell me if a stock could rip and run or if it's going to be a slow and steady mover. So number one, gappers. There are multiple ways to find gappers in pre-market. The easiest way to find gappers in pre-market is going to be by looking at our Trade Ideas pre-market scanners. We custom built these scanners to eliminate the noise for us. It takes in consideration multiple things: the gap, the volume, the float, the relative volume, the short interest, all of the data that you need to identify, is this a good stock worth watching? You're going to be able to find those stocks on our scanners that we stream live from 7 a.m. to 7 p.m. We stream our pre-market scanners, right, from 7 to 9:30. From 9:30 to 4, we stream our intraday scanners. And then from 4 to 7, our post-market scanners. This is by far the easiest way to identify these gappers, the stocks that have good potential, by focusing and looking at these scanners. Again, you don't have to go pay for them. I stream them for free live inside a chat from 7 a.m. to 7 p.m. Monday through Friday. But let's say that you're not a member. Let's say that you don't want to fork up $2,400 per year on these scanners, and then most importantly, have to learn how to code the scanners, right? I've coded a lot of these scanners. These are custom scanners. It took a lot of time, or I've had to pay to have them coded for me. So if you're not a member, you're not willing to drop that money and put in the time to learn how to code them, there are going to be other ways to find stocks that are gapping up in pre-market. You could use FinViz, right? FinViz and MarketWatch are going to be two free resources that you can use every single morning in pre-market to find these gappers. But these two free resources, they're normally delayed by about 15 to 30 minutes, which results in identifying stocks possibly too late. How many times have we seen a stock hit a scanner and it's only up 10%, 15%, and it's just trickling in with volume? And within 15 minutes, the stock is literally up 50%. I can't tell you how many times I've seen a stock hit our gap list, right? It's up, say, 15%. We're starting to build up with volume. We look on over, it has a catalyst. It looks strong. Within 15 to 30 minutes, that stock has already exploded 50, 60, 70% of the to the upside, right? We're finding these stocks in real time with our scanners. But again, you can find these stocks with Finviz, for example, with MarketWatch. They're great resources. They're free resources. But again, with these free resources, they're normally going to be delayed by about 15 to 30 minutes, which can result in identifying that stock too late. But again, couple free resources that you guys can use to find these gappers. And again, if you guys are members in chat, you're just focused on these pre-market scanners, you're going to be able to identify these stocks before the rest of traders identify those. Because I can't say how many times within 15 to 30 minutes, we see a stock up 50, 60, 70%. If we were using a free resource with delayed data, that trade's already late. We already missed it. We're able to find that stock in the moment, take advantage of it before the rest of traders jump on in. All right, so number one is gappers, identifying what stocks are currently gapping up or currently gapping down. Once we've identified these gappers, right, we have these stocks that are gapping up. There's a reason, right, they're gapping up. We're going to dive into the reasoning, but again, we've identified some stocks that are currently gapping up. We're already starting to eliminate noise. Stocks that are not gapping up, stocks that are not moving whatsoever, they're not going to be on the gapper list. So we're already starting to eliminate some of that noise by focusing on these gappers. Number two, we got to look at volume. This is the next step to continue to eliminate those noise, to eliminate that noise in the market. All right, is volume. Volume is extremely important, guys. Volume is everything. How much emphasis do I put into volume? Whether that's in pre-market, whether that's on the daily chart, whether that's on an intraday day trade, how much emphasis do I really place on volume? Like 80%. Volume is everything, right? Volume is one of the strongest, most powerful indicators. And a lot of traders don't look at volume like they should, but volume is going to help you get into good trades and keep you out of bad trades. So volume is extremely important. We want to find stocks that are trading more volume today than they normally do. This is called RVOL. RVOL, RVOL. You ever heard anybody say RVOL? The RVOL was 2. The RVOL was 10. RVOL stands for relative volume, okay? Relative volume is the comparison to what the average volume is. And we'll dissect that here in a second, all right? But again, volume, very important. We want to find stocks that are trading more volume today than they normally do on average, right? That's called RVOL, or relative volume. Why is volume important? Because if we have volume, we have activity. And if there's activity, there's potential for profits. Again, volume equals activity, and activity equals profits. If we find a stock, right, that's gapping up, right? Let's say we identify this stock that's up 20%, right? Check, number one. Number two, volume. And we see that stock normally trades 10 million shares, but today it's trading 100,000 shares. Does that really show activity, right? Remember, volume, right? We notice the stock is up 20%. Now we're looking at volume. On average, the stock trades 10 million shares per day. It's up 20% on 100,000 shares. We need to be mindful of that. That's not really showing me there's activity on the stock. It normally trades 10 million shares. It's up 20% on 100,000 shares. We do not have high relative volume. There is not more volume trading on this stock today than on average, showing me that there's not a lot of abnormal activity. And if we don't have activity, it's going to be hard to make profits, okay? You can identify relative volume right on the Trade Idea scanners, right? So in pre-market, when you have these scanners, you can see relative volume. Even our intraday scanners, you see relative volume. So the relative volume on ENSV is 139. It's trading 139 times the average. HYMC, it's trading 600 times the average volume, right? You can see that these stocks have high relative volume, and volume is so important, guys. One of the most important things that you could really focus on in pre-market to really eliminate the noise. So based on that example, you see a stock gapping up, right? You're looking at your gappers and you have a list and you see ABC gapping up 20%. Now it's time to look at volume, right? And you see that normally the stock trades 10 million shares a day, but it's only trading 100,000 shares. Wouldn't you consider that to be some noise? Maybe it does move. Maybe it does start ripping on up. Maybe it's a back burner stock. But at that point in time, in the moment, you can see that there's really not any abnormal activity. There's no real big time volume. So it's going to be really hard to lock in profits. That's why we're able to utilize volume to continue to eliminate the noise. My rule of thumb is 2x on the volume. So for example, if a stock is trading 1 million shares in pre-market and it trades 500,000 shares on average, this stock would have an R-vol of 2. The stock is trading 2 times the volume than it normally does on average. My rule of thumb is going to be 2 times. Okay, so again, if a stock is trading 1 million shares in pre-market and we see that the average volume is 500,000, we can check that box off, right? It's gapping up 20%. Check. It's a gapper. Check. Volume. Stock's trading 1 million shares. We check. The average is 500,000. Cool. It's trading at least 2 times. Check. Now you can see the volume compared to the average volume right on the Trade Ideas scanners. But if you don't have Trade Ideas scanners, there are some free resources that you could use to identify current volume to the average volume. One of those is going to be Yahoo Finance, right? So if you guys just head on over to yahoofinance.com and let's say you just pick a stock. Let's go pick IMPP, for example. So let's say you don't have this Trade Ideas scanners and you're like, man, how do I really figure out what the average volume is, right? And what the current volume is? Just go to yahoofinance.com, type in IMPP, and it's going to show you right on the home screen, right here. Volume, 55 million shares. Average volume, 23 million shares. Let's assume it's 9 o'clock in the morning, market has not opened yet. And this is what you see. You can see that we're trading 2 times the average volume on IMPP. So we can come back to the volume and check that off, right? We've checked up the gapper, it's gapping up. We've checked off the volume. It's trading 2 times the average volume today than it normally does on average. So we checked off volume. Every other stock that doesn't meet that criteria, it's not watch list worthy, right? It's not going on the watch list. It's noise. We're eliminating the noise. And volume is one of the most important ways to eliminate that noise. So we just eliminated more noise, but we've identified this hypothetical stock is gapping and it does have the volume. So check off gapping, check off volume. Step number 3, catalysts, right? Why is the stock moving? Why is the stock moving? Right? There's got to be a reason, guys. There's got to be a credible reason that the stock is gapping up, trading more volume than it normally does, right? It's very important that we identify the reasoning that the stock is moving, right? If a stock is moving up with no news, but it has volume, what could that be? Let's say we go through the gap list, the stock's gapping up 20%. Let's say we look at the volume, and the volume is there, right? We're trading 1 million shares today. On average, you trade 500,000. And we're trying to find a catalyst. And we're like, okay, there's no news. There's no daily chart formation, right? There's no technical setup on a higher time frame. It's not a prior day mover. It's not a sector sympathy play. Like, you're trying to identify the catalyst. You have to have a reason for the stock to be moving. And if you just cannot identify what the catalyst is, what could that be? It could be a typical pump and dump. How many times have we seen a stock gapping up and it has volume, open and just dump all day, right? Say it gapped up 50%. It had the volume and then it just dumps and goes right on the day. I've seen that time and time again. So understanding what catalyst means and the different types of catalysts are going to help you identify the reason that the stock is moving. If you can find a reason that the stock is moving, you are putting the odds in your favor that the stock could continue higher for the day. But if you do not find a catalyst, it's very possible that that stock is a pump and dump. And the last thing you want to do is have a pump and dump stock on your watch list to even feel the temptation about getting in. Eliminate the noise. If there's no catalyst and there's no reason for the stock to be moving, it's safe to say 80% of the time you're going to see that stock open up and dump. It's going to be a pre-market pump and an intraday dump, and it's just going to close right on the day. And we see that a lot. So what are the 4 forms of catalysts, right? There's multiple ways you can identify the catalyst, the reason that the stock is moving. Number 1, and the most popular reason, is news. right? It's going to be news. That is the most powerful catalyst, is going to be news, right? And there's other things that we can look for in these press releases to determine how good the press release is. Does anybody have my cheat sheet? Like I said a couple weeks ago, right? I had to reset my computer and I lost everything. So if anybody has that cheat sheet of hot keywords to look for in press releases, please post it up here inside of chat. But I know what they are, right? So we have a cheat sheet. Hot keywords to look for in press releases. So just because the stock has news doesn't mean it's great news, right? We want to find really strong catalysts. So we have to really dissect these press releases if the catalyst is news. So again, if we see that they released interim data from their phase 1 trial, but they haven't succeeded or completed their phase 1 trial yet, it's an okay press release, right? It's okay, right? It's an all right press release. But if you see a press release that says, we just met primary endpoints and saw positive phase 3 trial data in regards to, say, breast cancer, right? Wouldn't that be a hot press release? Absolutely. So here are the hot keywords to look for in press releases. Phase 1 trial, that's a keyword to look for in press releases. You see something that says phase 1 trial, that's a 1-star keyword. It's a press release. It's a catalyst. It's not the best, but it's a good reason. Phase 2 trials, 2-star keyword. Phase 3 trials is a 3-star keyword. And anytime you see meeting primary endpoints, that is a 4-star keyword. That is one of the most powerful. That is a very strong press release. That is a very strong keyword to look for in a press release. 80% of the time, a stock that's gapping up with high relative volume that has a catalyst, and that catalyst is a press release, and that press release has a keyword meeting primary endpoints, I would say 80% of the time, that stock's gonna rip and run, right? Stock's gonna rip and run. So here's the little cheat sheet. If you guys wanna take a screenshot of the screen, feel free. Phase 1 trial, phase 2, phase 3, meeting primary endpoints. Definitive agreements, acquisitions, mergers, FDA approval, fast track designation. Anything regarding cancer, that's a strong keyword. Partnerships, Carl Icahn, right? Anytime you see Carl Icahn name in a press release, the stock's gonna rip. Look at Cloudera back in 2018, 2019, CLDR. I noticed that Carl Icahn was added to the board of directors. I saw that press release. No one else was talking about CLDR. Then he had an interview the same day on CNBC talking about CLDR. I day traded CLDR. He was coming on CNBC, right? His name was all over this press release. That stock ran 20% in one day, right? Carl Icahn, right? For some reason, he gets stocks moving, all right? Anything that's like they were awarded, right? They were awarded this, awarded that, grants, large sums of money. New investors, they achieve things. They're launching new products, right? These are going to be some keywords, and they're broken down from 1-star being okay to 4-star keywords being this stock could absolutely rip and run for the day. So go ahead and take a screenshot of that, okay? So that's one type of catalyst, right? And that's going to be the most popular and the most powerful form of catalyst is going to be news. Number 2, technical setup. Right? You see something on the daily chart. You see a daily bull flag, right? Like Boeing 2 weeks back. You see a daily bull flag. You see a daily ascending triangle breakout. You see anything, right? It could be any kind of technical setup on the daily chart. Mid-candle breakout. Maybe it's an ascending triangle. Maybe it's a dead cat bounce. Maybe it's a daily bull flag, right? That's a reason. That's a catalyst, right? A catalyst is the reason that the stock is moving. So it could be news, which is the most popular and the most powerful. It could be a daily chart formation, right? It could be a technical setup such as a mid-candle breakout, right? Number 3 could be momentum, right? It's a prior day mover. How many times have we seen a stock on day 1 gapping up with high volume, right? And it has a very good catalyst. And then day number 2, it gaps up again with high volume, but it doesn't have fresh news. So what's the reason? It's a prior day mover, right? That's momentum. I can't say how many times we've seen a stock gap up and rip on Monday, and it continues the rip through the rest of the week. What's the catalyst at that point in time? It's momentum, right? It's a prior day mover. So that's a reason the stock could be moving another day as well, is based on its prior day movement, its momentum. It's a prior day mover. That's another catalyst. Market conditions. And that's what we're seeing a lot of right now, right? We're not seeing a lot of these stocks with news. We're not seeing a lot of these stocks with technical setups. Some of these stocks are momentum, INDO, INPP, but some stocks are not momentum or not prior day movers. So what's the fourth and final form of catalyst? Market conditions. What was the market conditions for last week, right? Let's take away energy, oil, and gas sector stocks. What were we seeing a lot of? Healthcare stocks, right? Therapeutics, biotechs. What were they? They were low float stocks under 50 cents, right? It seemed like every day we came into the market, we saw a stock that was a low float that was 50 cents ripping up to $1, 60 cents to $1, 80 cents to $1.20, right? Those were market conditions. Monday, we saw that. Tuesday, we saw that. Wednesday, Thursday, Friday, we continued to see that. There was no news on those stocks. There wasn't a technical setup. There was no momentum. It was simply market conditions. Market conditions were the catalyst. That was the reason we continued to see low float, sub-dollar stocks rip and run, simply because those were the market conditions. That's what traders continued to resort to. Now we're seeing a lot of sector sympathy, right? We have the energy, oil, gas, that sector on a tear. So what are we seeing happen? We're seeing some of these energy stocks, gas stocks, oil stocks going on a tear, petroleum stocks, INDO, ripping and running to the upside. Those are market conditions. But that breaks down even further into sector sympathy. We're seeing one entire sector really get the attention, really get the volume. That's the catalyst. The fact that oil is just ripping to the upside, we see some sector sympathy bleeding on over into some of these cheap small cap stocks that are within that sector, and those stocks are ripping and running. They don't have news. There's not a technical setup, but there is a reason, and that reason is sector sympathy. That would be a valid catalyst, right? So those are going to be your different forms of catalysts, but it's very, very important to eliminate the noise that you identify that there is a catalyst. Because if there's no catalyst, right, there's no news, no technical setup, no momentum, and there's no sector sympathy, but you still see a stock gapping up 20% and it's trading at volume, I would say 80% of the time, that's going to be a typical pre-market pump and an intraday dump. And the last thing you want to do is even have that pump and dump on your watch list. It's noise, right? Eliminate the noise. That's the goal. That's the point of pre-market stock selection. So again, number 3, you've got to have a catalyst. Number 4, float, right? I really want to be mindful of the float, okay? The float is extremely important because it allows us to gauge if a stock could spike big or be a slow and steady mover. So again, understanding the float is really important. You guys know me. I like stocks that can rip $5 at a time, $10 at a time, right? I want to find low float stocks. Some of you guys inside the chat are like, man, that's too much volatility. It's moving too quick for me. I want to find a slower, steadier, more consistent trending stock. Less volatility, but still something that can move. You want to find larger float stocks. So understanding the float is going to allow you to gauge, is this a stock that's going to be really volatile, ripping up $5, dropping off $5, or is this going to be a slow and steady mover, a slow and steady climber? So that's why float's very, very important as well. The float is the total number of shares that are available for the general public to trade, all right? So it's not the total amount of shares, it's the float. The float is the total number of shares that we can trade, the general public. It's what we have availability to trade. So low float equals big movers, okay? The lower the float, the bigger and the faster a stock can move. Large float equals slow movers, okay? So large float, slower and steadier, less volatility, less big moves up and down, okay? So I consider low floats being anything under 25 million. So if you ever hear me say this stock is a low float, it's gonna be under 25 million in float, right? The lower the better. 1 million in float, 2 million in float, 5 million in float, the lower the better. Because again, low float equals big movers, lots of volatility, crazy price action. I like that. I thrive in those types of markets. I want to see stocks that can move dollars at a time, not 10 cents at a time. So low float, under 25 million. Medium float, anything between 25 million to 75 million. Now, these medium float stocks can still move like a low float stock if they have the volume. I can't tell you how many times we've seen a 60 million in float stock move like a 1 million in float stock. So if it has the volume and that's where everybody's at, you can still see these medium float stocks rip and run. They could be big volatile movers. But then you got large float stocks. Anything over 75 million, it's really hard to get those stocks going. 100 million, 300 million, 500 million, right? If you see a stock that's gapping up, right? You see a stock that's gapping up, check. You see a stock that has high relative volume, check. You've identified that stock has a good catalyst, check. And you want to make $1 to $2 a share, right? You want to get into that volatile stock, that stock that can move big and rip big. So you jump in when the market opens and it's not doing anything. It's moving like 5-10 cents, 5-10 cents. You're like, what's going on? You got to be mindful of the float. If you were mindful of the float, maybe you would have realized the float was 500 million. Well, if you're a low float penny stock trader and you thrive off volatility, right? And you like stocks that could rip $1, $2 at a time, but you forgot to look at the flow, that could have been a big key thing that stood out to you. Say, you know what? I'll watch the stock, but maybe it's not one of my top stocks, right? It's 500 million in flow. It's going to take a lot to get this stock going, right? If you're a trader that likes low float, quick movers, identify the flow. Is it a low float? Can it move big? If you're a trader that likes those slow, steady movers, identify those large float stocks that will move slow and steadily. Okay, so again, that's my simple process. I told you guys in the beginning, you're probably like, what? That seems too easy. That's the point, right? My goal, my job is to simplify the trading process, to make things easy. Day trading is already hard, guys. Let's be honest. It's already really hard. Why make it harder than what it needs to be? Big terms, capitulation, this and that, and having a million different things on your checklist. Find the most important things and build a checklist and keep it simple yet effective. And that's what I've done over the past 7 years. Keep it simple, stupid, KISS, right? So how do I keep it that simple? And again, we can clearly see that this process works 80 to 90% of the time. Nothing's ever 100%, but it's clear for the past year that we've been, putting this process into an effect inside a chat. It's clear that 80% of the time we do eliminate the noise, and the stocks that are on our watch list are the stocks that rip and run for the day. As a new trader, I was never able to clean up my watch list to 3 to 5 stocks. I didn't know how to clean up my watch list. I didn't know what was noisy and what wasn't noisy. So over the years, I've come to find out it really comes down to 4 things. Number 1, obviously you're gonna find the stock because it's gapping, right? Number 1, you're gonna even come across the stock because it's gapping, okay? Gapping up, gapping down, doesn't matter, it's a gapper. Number 2, identify that volume. The more volume, the better, right? My rule of thumb is 2x. We want to see the stock trading 2 times the average volume, right? That's another check, right? Eliminating the rest of the noise. We see a stock gapping up 20% and it's trading 10,000 shares, but on average it trades 10 million. Clearly, that's noisy. We shouldn't have it on our watch list. It's not going to be the stock that has the best opportunity for the day. Number 3, catalyst. Really important. I mean, just as important as the volume. Volume is very, very important, but catalyst is very, very important as well. Why is the stock moving? How many times have you guys come into the market, you see a stock gapping up, you don't look at the volume, you don't look at the catalyst, and you don't look at the flow. You just look at your gap list. How many times have you added a stock to your watch list without looking at volume, without understanding what the catalyst is, and you see that stock dump and fade and fall, and you're like, what happened? Why is the stock not moving? It was gapping in pre-market. Why is the stock not ripping on up? What's going on? It's happened to me a lot. So again, I've identified that there has to be a reason for the stock to move. If the stock is gapping up on light volume and there's no catalyst, it's probably going to dump on off. And we see that across the board. So again, catalyst, very, very important. Why is the stock moving? Could be news, could be a technical setup, it could be a prior day mover, or market conditions like we're seeing right now with like CEI, USEG, USWS. And then lastly, I want to find stocks that could rip dollars at a time with ease, right? I buy it and it could spike a dollar just like that. I want to find low float stocks because the lower the float, the bigger the spikes. If you guys do not like that volatility, you still got to be mindful of the float. You don't need to be looking at 25 million or less floats. Maybe you take a step away and you don't trade any stocks that are under 50 million in float because they just move too quick. Maybe your comfort zone is finding large float stocks that are gapping, that have volume, that have a strong catalyst. Maybe it's a 500 million in float stock, but you know you're going to trade it throughout the entire day, right? You're going to scale in, scale out, and look for that bigger, slower, steadier move, 50 cents up, $1 up. Maybe that move takes all day, but you're able to take a step back away from that volatility if you do not perform well when the market's extremely volatile. So last but not least is the flow. And again, guys, very simple process, but that's the job, that's the goal, that's the point, to simplify the trading process. It's that simple, it's that easy. Simple process of selecting the best stocks to trade for the current day. Our number one job in pre-market, aside from trading setups, is to eliminate the noise. That's it. Eliminate the noise. Like I said this morning, we had 30 stocks that we could potentially put on our watch list. 30 freaking stocks, guys. That's too many. So what did we do? All we did this morning was eliminate the noise. And what did we come up with? We had 3 to 5 stocks with the best potential. And those 3 to 5 stocks that we were looking at performed very, very well. 10 o'clock, a lot of those top stocks started to fade on off. They're noisy. They came off the watch list. And then we identified other stocks that were starting to move on up. They were gapping. They had volume, right? There was a reason for the stock to be moving. Nice low float stocks, but we still were able to, in the moment, at that point in time, 10 o'clock, still take a step back, eliminate the noise, clean up our watch list, and still have only 3 to 5 stocks to look at for the day. That's how you're going to keep your head straight. That's how you're going to keep your focus on a set stock, on a set group of stocks. Get to know those stocks. How are they moving? Are they consistent movers? Are the technicals being validated? Is there a lot of hidden selling or hidden buying, right? Is there a lot of false breakouts? Is there a lot of nasty price action? If you're doing this all day, right, you're never really going to get to know a stock and how it's moving. And you're never going to make consistent profits. Focus. Get your head off a swivel. 3 to 5 stocks. Focus. How are they moving? Are they clean? Are they consistent? What's the price action? Is there a lot of hidden selling? A lot of hidden buying? Is there a lot of false breakouts, right? Get to know the stock and how it moves. And you'll be able to identify a stock that's clean, consistent, the technicals are being validated and honored, and you're going to get confident with that stock. So when you see an opportunity present itself, you already know how the stock moves. You know your confidence level, and you're going to have that confidence to put on a trade. All right? So if you guys have any questions, let me know. Like I said, before we dove into this, very simple. You're honestly probably going to walk away like, dude, it's that easy? Nah, nothing's that easy. It's got to be more complex than that. It's really not, team. It's not. It's that simple. It's that easy. Simply eliminating the noise with 4 easy steps. You do that every single morning without fail. You're going to go from 20 stocks to 5 stocks. And you're going to be able to focus on the stocks that have the best potential for the day. And this is going to work for you 80% of the time. Like I said, nothing's ever 100%, but 80% of the time is better than 0% of the time. So get in the habit of going through your pre-market stock selection criteria, go through that checklist every single morning on every single stock, and you'll come to realize your watch list is shrinking. You'll be going from 30 stocks, 20 stocks, down to 10, down to 5, down to 3, down to 2. And you'll be like, boom, I got my 2 stocks for the day. What's up? Right? I'm going to make money on these 2 stocks. Joe Blow over here is trading 30 stocks a day. We'll see who comes out on top. You'll notice that your watch list starts to be reduced. It starts to shrink. You're going to be a lot more confident, and you're going to see better results in the market. All right, so theme of the week, preparation. And what better way to start than pre-market stock selection to get prepared for the opening bell at 9:30. Close the webcam so I can screenshot the screens. Yeah, absolutely. You want me to throw the PowerPoint back